Hello there. Welcome back to my channel. In this video, we want to look at the calculation of interest on loan. And we are given a trial balance that we have here. So we are only going to be concerned with where we are given the long-term loan, 10% a long-term loan, which is here. And if you check that the amount that we have is 90,000 of the long-term loan. So in that case now, we are given it as 10%. So we are going to say 10% of 90,000. That's how we are going to calculate our interest on loan. But if you check there, just above our long-term loan, we are given also interest on loan, which is 5,000. So we have to take note that the income statement is prepared on the accrual basis. It's not prepared on cash basis. So uh, with that, we can now be able to see the difference between the interest on loan that we are given there and the interest on loan that should be recorded for the period. So what we are saying is the matching principle says what belongs to the current year should be recorded at the current year. And what does not belong to the current year should not be recorded in the current year. In other words, we are saying if we have got an expense that haven't been paid, which means it's owing, we are supposed to add that amount to what has been paid so that we enter the actual amount that it belongs to the period. So we should enter the amount that belongs to the period, whether paid or not, if it's an expense. So the same applies to income. If we receive income in advance, we are supposed to subtract that income because it does not belong to the current period. So in this case, at the 10% of 90,000, you are going to get it as we are just going to say 10%, which is 10 over 100, and then you multiply by 90,000. So basically, that's the calculation that we have. And then if you do that, you see that the answer that you get is 9,000. So this 9,000 is the one that is supposed to go to the income statement as interest on loan. But there's an indication that what was paid is 5,000. So it means the difference is still owing of interest on loan. So in brackets, you are just supposed to show that there is an amount that is still outstanding of interest on loan by saying the 5,000 plus the 4,000 that is owing, and then you put your 9,000. So in other words, when we now come to your answer section, in the income statement, we are saying interest on loan. You can just show in brackets that there is 5,000 that was paid for interest on loan, but there's 4,000 that is still owing to get your 9,000. The 9,000 is the one that belongs to the current period. So basically, that's what we have on the calculation of interest on loan on a particular question paper that we have just shown there. So please, let's not forget to subscribe and share to our channel. More videos, more typical examination questions are going to be uploaded on this channel. So let's get notified. Let's meet again in the next video.